Hey, what's up, everybody? We are going to do a comparison of Donald Trump's tax return and Joe Biden's tax return. Now, we're going to look and see, hey, is Joe a hypocrite? Is he taking advantage of loopholes or tax advantages for the rich that he is always campaigning against and blaming Donald Trump for? We're going to take a look and ask, is Donald Trump doing anything that he shouldn't be doing? Are there loopholes and tax advantages or potential tax fraud here? Are there things that Donald Trump has done that he's not allowed to do on his tax return? And the same with Joe Biden. So what we're going to do is we're going to actually walk through now. Joe Biden has released his tax returns. I have 2016 through 2019. Unfortunately, Donald Trump has not released his, so I'm going to have to rely heavily on the New York Times article that gives us as much details as we currently have right now for Donald Trump. But sit back and we're going to actually walk through Joe's tax return. This is part one of a two-part video series here comparing the tax returns together and pulling out some information. Let's jump into the actual tax return here. Like I said, we've got 2016, 17, 18, and 19. The first thing that sticks out to me on Joe Biden's is just the amount of income and how it fluctuates from year to year. So bear with me too, because the IRS had to change the forms a couple of times through these years. So they're going to look a little bit different each time. So in 2016, if we go down here, Joe Biden and his wife, their taxable income in 2016 was $338,000. In 2017, that taxable income was $9.5 million. That is a huge jump. When I'm looking back through tax returns that I didn't prepare, I get a new client or something, I'm looking at how this year compared to last year so that I can come up with questions for the client and say, hey, look, what changed? Did you forget to give me some information? Is there something significant that happened between these two tax years? Because I want to know if, one, the prior year that I did not complete was done correctly, or make sure I have a complete picture of everything that's going on in the current year so that I can prepare an accurate return. So this is a significant thing that jumps out to me. Income went up from $300,000 to $9.5 million from 2016 to 17. All right, in 2018, taxable income was $4.2 million, another pretty good jump from $3.5 million. And then in 2019, taxable income drops back down below $1 million. So right there from the beginning, we have a pretty low year, and then we go up really high, close to 10 million, and now we're coming back down again. So if we think about this, 2016, okay, Biden was president, and then Biden was vice president, and then he exits office. And, my first commentary here that doesn't really have anything to do with the taxes itself is, man, it must pay well to be an ex-vice president, right? And that goes for, just the fact that you're vice president, you become pretty famous, everyone knows your name. And as we'll jump in and see, the income jumped because of speaking engagements and the book that Joe and his wife wrote. Each of them wrote their own books. So that's why the income's going to jump significantly. So if we go back, 2016, I'm going to actually just kind of not really look too much at 2016. Everything's fairly similar from year to year with Joe. We have W-2 wages. This is where you're going to see your income typically if you're a W-2 employee. Now, your tax return is exactly the same as Joe's, right? It's the same form. It's the same lines. He just might have higher numbers on a particular line, and he might have some numbers on some of these lines that you don't have. So we're going to walk through that and explain what they are so that you can make your own judgment call here on how Joe represents himself and if it lines up with his actual tax return. I'll be honest with you, I think that most of the time when politicians, not just Vice President Biden or President Trump, not just those, not just Democrats, not just Republicans, but pretty much all politicians, I think that they say things in a way to represent them in a specific way. I think we all know this, where they want to point that the other guy's doing something they shouldn't do and you should vote for them. And so let's just walk through and see what's actually going on. I think that they typically count on the general public not understanding what they're talking about and just taking it at face value, because a lot of people, to be quite frank, don't really understand the tax return. They don't know what's going on. They don't understand the tax code. So that's what I'm here to try to help you do. So wages, $315,000 for 2016, a little bit of interest, a little bit of pension here, and annuities, a little bit of real estate income, and his Social Security benefits. Nothing crazy going on. He itemized his deductions, $55,000. So right there, already we have a tax loophole, if you want to call it that, for itemized deductions. And so that's on Schedule A here. Looks like for Joe, it's just state income taxes, real estate taxes on his house, home mortgage interest on his house, and his charitable giving of $6,000. Not too charitable there, Joe, but that's all right. Not everybody likes to give to charity. So those are his itemized deductions. All of that, we get down to his combined income, his AGI down here, and then, of course, as we mentioned, his taxable income of $338,000 that year. He paid income taxes of $87,000 plus AMT, so $91,000 is his total tax. And if we want to take, $91,000 divided by his adjusted gross income of $396,456, that's an effective tax rate of about 23%. All right, so use that number however you want in your analysis. Joe had withholding, and he came out owing about $1,000 because his withholding wasn't quite enough to cover all of his taxes. So that's 2016. Now, let me just point out this, in the 4 years we're looking at, is Joe's, quote, worst year for income. This was the year where he made the least amount of income. At an AGI of $396,000 down here, $396,456 AGI. In 2018, now I didn't go back and look specifically at 16, the most recent I've looked at was 2018, but with an AGI of pushing 400,000, that puts Joe in the top 1% probably. So if top 2%, all right. So if you're making in 2018, if you were making over 500,000 on this line as your AGI, you were in the top 1.1% of taxpayers. So Joe's there sitting right pretty close to that. He's in the top 2% here. Now, if we go into 17, again, like I said, his taxable income jumps to $9.5 million. His AGI is actually sitting at $11 million that year. So again, you hit the top 1% when your AGI is at 500,000. So if you want to talk about the 1%ers that Joe likes to talk about, hey, 2017, 2018, 2019, Joe, Mr. Vice President, he is absolutely one of those top 1%. Now, let's jump ahead to 18, because again, there's nothing hugely significant here. Again, the $10 million, where did it come from? That's the big question. So his W-2 wages were up quite a bit from $315,000 to $720,000. And down here on this attached Schedule E, that's $10 million. Okay, there's where it pretty much all came from. All right, 2018, W-2 wages up again to $1 million. And then, sorry, it's in a different spot in 17. The additional income added in was $3.3 million. And then for 2019, W-2 income's at $500,000. And that business income from Schedule E added in right here is back down to $1 million. So really 17 and 18, pretty big jump, 10 million and 4 million, and then back down to $1 million. So still not doing bad in 2019, but what was this? All right. So if we go down and we look for what created that $10 million, we'll find that it all came from this Gelta Capri Corp, which is an S corporation, of $9.5 million, and then a Giacopa Corp, which is an S corporation, of $500,000. Now, if we go down also to their W-2 wages, which jumped pretty significantly as well, we will find that the wages received from W-2s, there's that S corporation, both of them again, $145,000 and $100,000. All right, so this is what's making up a significant piece of Joe's income for 2017, 18, and then actually still, if we look at 2019, this is still, $228,000 of that, plus the W-2s from those two entities are still sitting up there, well above 100,000 as well. So even just those, are going to put Joe in the top 2% pretty much of wage earners here in America. So what are these two corporations, all right? And what's the tax loophole that Vice President Biden and his wife are taking advantage of that you can benefit from too? Now that is the S corporation. So as I mentioned, the $10 million right here is coming from net income being passed through from a flow-through entity or a pass-through entity where the corporation itself, which has elected S corporation status, does not pay any income tax on that. The net income flows through to the owners, and they pay income tax on their personal return. Now, one of the articles I read mentioned that President Obama and First Lady Michelle Obama did not do S corporations because, I don't know, it's saying that they didn't want to, be hypocritical in that way. Now, look, this is a significant tax planning strategy. It's something that's in the tax code. There's nothing wrong. Let me just say it right here. There's nothing wrong with Joe Biden's tax return. There's nothing in here. The only thing that could potentially be in this tax return that is incorrect is if they took deductions that they weren't entitled to, or if they didn't report all of their income and they did that intentionally, then you would have tax fraud. You'd have tax evasion. All right. There's no way for me to actually know at all if these returns are accurate. I'm basically just looking at what's there and explaining to you where Vice President Biden is kind of in that realm of, okay, he's in the top 1% of earners, at least in, the last 3 tax years. And he's taking advantage of what he might deem. Now, I honestly don't track politics that closely, so I'm going to leave it to you to make a judgment here on whether or not Vice President Biden is being a hypocrite. But this S Corp, this is a huge tax planning piece because what happens here is instead of being self-employed and paying self-employment taxes, which are your Social Security and Medicare taxes, on the entire amount of income. So think about this $10 million and add back in the W-2 wages that they had from these corporations, which is deducted from this net income at the corporation level. Add that together, you've got about $10 million that would be subject to Social Security and Medicare. Now, Social Security piece is going to cap out. I forget what it was in 2017. Right now, it's sitting around 137,000. So that's the largest piece. That's a little more than 12% of the 15%. Is Social Security piece. That's going to cap out at 137. His W-2 wages were above 137, so the S Corp isn't saving him any Social Security tax. What it is saving, though, is Medicare tax. So even if you have a really high income taxpayer who elects S Corporation, now if you have a lower earner who elects S Corp and can pay themselves, now this gets into what we're not going to talk about really in this video, but you have to pay yourself a reasonable salary because the IRS knows that by electing S Corp status, you can, don't have to pay Social Security and Medicare on some of your earnings. That's a big planning tip and why, frankly, pretty much anyone elects S Corp status is to save on taxes. All right. So you could call that a loophole. A lot of people say this might be a loophole for the rich, but it's not. You can do it. I have an S Corporation and I'm certainly not above that threshold where I'm in the top 1%. This is available to you as well. You need to evaluate your specific situation to see if the S Corp makes sense and if the added cost of an S Corp versus a sole proprietor business actually nets you savings in the end. But that's all things that we absolutely will do if you come in for tax planning. And so to get back to Vice President Biden's return, this is really the biggest thing that jumps out to me. And again, I'm going to leave it up to you to say whether it's hypocritical or not, but he's taking advantage of an S corporation, which for me, if he was my client, absolutely. I would not fault Joe Biden for this at all. I think that, you'd be idiotic to not take advantage of this when it's right there in the tax code for you to be able to utilize. Again, taking advantage sounds like a negative connotation, but really what I mean is utilizing tax strategy to save on taxes. So let's get back. What did this do? Okay, so let's say $10 million. I just mentioned it didn't help save any Social Security tax because both of them were already capped out with their W-2 wages from this S corporations that they had to pay themselves. But $10 million times the 2.9% Medicare tax that they did save. If this had been self-employment income on a Schedule C, you can pay Medicare tax on the whole thing. By putting it into an S corporation, paying yourself a salary, you only pay Medicare piece on the salary piece, but this $10 million of net income from the business is going to flow through. That saved them $290,000 in tax by simply setting up an S corporation. Okay, so I'm going to leave that on you. Is that something they should be doing based on how Vice President Biden campaigns? Or is that hypocritical? Okay, this is clearly what some would deem a loophole to save on taxes. All right, the next one is your Schedule A itemized deductions. So in 2017, your SALT limitation, your state and local tax, did not get limited yet. That didn't come into play until 2018 after the Tax Cuts and Jobs Act. So right now, he's deducting fully his state income tax, his real estate taxes, home mortgage interest. Hey, look, Joe got a lot more charitable when he made $10 million. He gives $1 million away here. And if you want, you can actually see, I'll post a link to the page where these actual tax returns are, but you can scroll down and you can actually see, where did Joe give these cash contributions? Now, I've read through the list. I personally don't think there's anything wrong with any of these, but I could see where news media might jump on some of these and they might say, hey, Vice President, you gave $150,000 to the Beau Biden Foundation. Isn't that your own foundation? Again, Vice President Biden should not. If he does, this is a completely different issue, but we're going to assume he's not getting any kind of personal benefit because this is set up as a nonprofit corporation. He shouldn't be getting any benefit. It's just named after his son, and it's for the protection of children. I'm not sure what that nonprofit does, but look, it's absolutely fine for him to give it to you, but I could see where a news media would jump all over that one, as well as the Joe Biden Foundation that he's given $100,000 to and say, you're just giving money to yourself. It's not how it works. These are nonprofits. There's no way for him to legally get access to that money while also getting a charitable contribution for this. And you can look through some of these other charitable contributions that Vice President Biden made and see where the money went. So those are kind of the big key elements in Vice President Biden's tax return. Again, there's nothing major here. It's W-2 wages, it's pension, retirement distributions, it's Social Security that he qualifies for and is taking. He's getting $52,000 in Social Security benefits while making $1 million a year. So let's maybe, hey, should someone making $1 million a year? Well, he paid into Social Security. All right, so he's qualified for it. He's allowed to take it. These are all just, basically the tax laws that I'm walking through. There's no such thing, and you've probably heard me say this if you watch any other videos. I hate the word loophole. There's no such thing as a loophole, or maybe by definition it is a loophole, but it's available to anyone who qualifies for it. All right. So, like I said, the S corporation, you can take advantage of that. The itemized deductions for your property taxes if you own a home, mortgage if you own a home, charitable giving. You can take advantage of that loophole if you give and you own a home and you pay property taxes. Basically, if you have the situation, you qualify for it, you get to take advantage of these quote unquote loopholes as well. They're not reserved or cut out for anyone specific. It's basically to incentivize behavior. They want to incentivize home ownership. So they say, hey, if you own a home, we'll let you deduct that. If we want to incentivize charitable giving. If you give to charity, we'll let you deduct that. Now, again, in 2018, the standard deduction, which is what you take if it's higher than what your itemized deductions are, was doubled. So that helped everyone out, all right? You may not itemize anymore, but that still didn't hurt you. If you were itemizing at $15,000 of itemized deductions before because the standard was only $12,000, then you were getting a benefit of $15,000 in deductions. Because that was doubled to $24,000, you're not getting more benefit than you were by itemizing. So, hey, that's great. That really helped out a lot of people. And that really helps out the lower income people as well, because it's a standard deduction. You get the $24,000 as a married couple, $12,000 as a single individual. And that's rounding a little bit because there's some hundreds, a couple $100s in there too as it goes up each year. But you benefit from that. That's a loophole that everyone gets to deduct off of their income. And so as you can see, the tax return, we'll go to 2019, the tax return is just, you're adding up your income, you get some deductions or loopholes that you get to subtract off of that, and then you get your taxable income. The tax is calculated. You tell them how much withholding you had versus how much tax you had, and it says, hey, you either overpaid or underpaid. So you get a refund or you owe more in taxes. All right, now, comparing that to Donald Trump's return, like I said, Donald Trump apparently has some S corporations as well, some of these flow-through entities where he's saving taxes. There's a lot of things written in these articles that have nothing to do with the actual tax return. Like I said, I read one about Vice President Biden where it was talking about these loopholes he was using, really a lot of qualitative, newsy language to stir up your emotions, to basically say, hey, Joe, you're a hypocrite. Why are you doing these things when you campaign against them? Again, there's nothing wrong with this tax return as far as I can tell. Again, the only thing that would be wrong is if any of the information is accurate. Now, we cannot see the S corporations. Again, the S corporations that we talked about, we see the $10 million flowing through, and we see the W-2 wages from the S corporation being paid to Vice President Biden and his wife, but we don't see the actual S corporation return. So while $10 million came through from that S corporation onto Vice President Biden's individual tax return, that S corporation could have had gross income of who knows how much, $10 million, and then maybe business expense deductions of another $10 million to net the $10 million of net income that flows through. We don't have those tax returns. We don't know what kind of deductions he has taken. So in this New York Times article, we see over, President Trump paid $70,000 over multiple years for his, hair care, for hairstylists. We don't actually know. I don't know where they got that information from, because even if you get the S corp tax return, that's likely not going to be a line on the tax return. So the New York Times has apparently gotten either very liberal in their interpretations, or they've gotten a lot more documents beyond the tax returns that shows these line items like hairstylists and a couple of other things they mentioned in the article. Now, I'll get into that a little bit more in my second video where we dive more on the Trump tax return. This one was more about Vice President Biden's, but when we go more into President Trump's tax returns, I'll talk a little bit more about the New York Times article, where it seems like they're stretching or have other documents that go beyond the tax return, because they've got a lot of information that goes beyond what you can find on a tax return. All right, so we don't have Vice President Biden's S corporation tax return. Perhaps there's tons of deductions for business travel, which a lot of people say, hey, you're deducting that because you traveled for business, but didn't you personally get to go? Didn't your wife go with you? Are you deducting their expenses? How's this work? So all of those things, you have to know a lot more details to find out if it's accurate or not. So what I will go to say is we rely on the IRS. The IRS will audit anything that they think is not legal to do on a tax return. President Trump right now is apparently under audit for some of his tax years. They will find anything that was inappropriate, and they will adjust the taxes, and there will be penalties and interest if that happens. And so we rely on that. I personally think that it's ridiculous that we even look at tax returns when it comes to presidential candidates or others for office, because like I said, a tax return is here. In fact, 2019, this tax return, again, the itemized deductions, Vice President Biden only took $15,000 in charitable giving. Perhaps he had more than that, but chose not to deduct it, filed the tax return. Maybe after he runs for office, he'll go back and amend this to claim much more deductions, which would reduce his taxes. Because again, if we take his tax divided by his AGI here in 2019, 287,693, divided by that AGI of 944,737, we have an effective tax rate of 30%. So, hey, if you want to show that you're paying more in taxes, paying your fair share, then, just don't take all the deductions you're entitled to, release your tax returns, run for office. You have 3 years to amend this tax return. I have no reason to believe that Vice President Biden did that. I'm just saying, it's absolutely possible, and it would not be illegal, fraudulent in any way to not take deductions you're entitled to, and then to later amend the return and say, hey, I've got these deductions, I'm entitled to them, let me get those deductions out. It would certainly be misleading to the public, but it wouldn't be fraudulent in any way. It'd be perfectly fine to do that. So there you have it. Again, the biggest thing here that I see is, one, there's not a lot of capital gains. There's not a lot of investments. He doesn't seem to own or be selling much capital assets. He could benefit from investing in stocks, or investing in capital assets, or even investing in like real estate, where he's getting real estate rental income, because that can really help out as well. Now, he did have some on 2016 for a cottage, but that $26,000 here, $18,000 of net income from this cottage rental in Wilmington, Delaware. But that dropped off in 2017, 18, 19. I don't see that anymore. So I'm not sure what happened to that property. That'd be something I would ask about if I was preparing to return. What happened to this property? I don't see anywhere on the returns where it was sold. And so, there's no capital gains there. This was one of the things that Mitt Romney had, which was why his tax rates were so much lower, is because a lot of his income was not these W-2 wages or S corporation flow through income. It was capital gains. Now, again, to incentivize, you can say maybe this shouldn't be the case, but to incentivize investment, long-term capital gains, anything held more than 1 year, gets a preferential tax treatment. Again, this is not something you have to be rich to benefit from. In fact, the less money you make, the more you benefit from a long-term capital gain. Why is that? Well, because if you were in the 10 or 12% tax bracket and you have long-term capital gains, you actually pay zero income tax on that. So you can go buy stock right now. Maybe you only have $1,000 to go buy some stock with. You go put it in a good quality company. Maybe you like Coca-Cola, you think they're a good quality company, you want to invest in them. Go buy $1,000 of stock, hold on to it for 1 year and 1 day. If it goes up to $2,000, you can sell it. You have a long-term capital gain of $1,000. That is income that you pay 0% income tax on if you're in the 10 or 12% tax bracket right now. If you get into the next tax bracket, you're going to pay 15%. So you might be in the 22% tax bracket for ordinary income, but you're only going to pay 15% taxes. And then eventually, if you make enough, you'll get into the 20% tax bracket. So you might be in a 37% tax bracket for your ordinary income, like potentially, say Mitt Romney is, Joe Biden is, President Trump most likely is. Then instead of paying the 37% ordinary tax rate, you're going to pay 20%. So it's just to incentivize that investment. But my point here is you can benefit from that too. In fact, you can benefit from it even more than the rich can. Because I only do that because it's relative. I would agree with you that this Vice President Biden, Trump, Mitt Romney, they're all rich. I would agree with that, but that is a relative term. That's why I put it in quotes. But again, you can benefit from this as well. It's not some loophole only for the rich. If you have questions about, hey, what can I benefit from? Is an S corp right for me? I have my own business. How can I save taxes? What about this long-term capital gains? Are there other things? What about, you mentioned real estate was something that I could benefit from. How can I do that? Now, again, Vice President Biden is only benefiting from this S corp. So I'm going to leave it to you to judge whether or not that makes him hypocritical. Or should he just be voluntarily paying more in income tax because he's in the top 0.5% of earners here? Again, 2017, 18, $5 million of income. I mean, he's up there making a ton of money off of speaking engagements and cashing in on that vice president fame, which we would all do. Any good capitalist would take advantage of the opportunity as you have it, make the money, set it aside for your family, take care of your family. So no fault here from me for President Biden. But there's that. Again, I'm going to have part 2 comparing President Trump and just walking through the taxes again on letting you make up your mind. But that's where the taxes are. They're available to everyone. These loopholes that are on President Biden's return, it's available to you too. So there you have it. My name's Brad. I'm with Wooten CPA. My goal in my practice is to bring peace to your finance and tax responsibilities. Please hit the subscribe button and the bell so that you get notified of other videos, including that one coming out, part 2 of this, where we continue to compare President Trump and Vice President Biden's tax returns. Thanks for watching.